Hi everyone, so welcome to Investing for Value. So I've got another stock on demand. This one's Facebook. This one needs no introduction because we all know this company. We will probably have an account with this company, and probably most of us are kind of aware that they were fighting some privacy issues. So this is a company that owns the Facebook platform. They own Instagram, which is doing really well right now, and they also own WhatsApp. So you've got quite large platforms that a lot of people use. And their revenues really show that this is a company that generates a lot of money. First off, let's just look at the revenues. If we go from 2016 to 2017, their revenues grew 47% to $40 billion. You don't really get to see many companies grow their revenues that quick and at that large. Of course, It's starting to slow down quite a bit. So from 2017 to 2008, revenue grew 37%, but that's like from 40 billion to 55 billion, which is like 15 billion extra, which is no small feat. But just because they have this platform that just happens to have like most of the world's users, it kind of gives them a really good position to just charge a lot for advertising. They have all the pricing power, but it doesn't mean they can increase the pricing power as much as they like. They still have to be reasonable because they're still, in a sense, combating Google as well. So last year they got to $70 billion, and it was about a 26.6% increase. So when you start looking at these growth rates, they are starting to slow down quite a bit from like 47% quite a couple of years ago to 26%, which is quite a slowdown. Though if you're still able to grow 70 billion at like 20%, that's still really impressive. And this is a company that gets really good margins because we can look at 2017, they earned 40 billion, but close to 16 billion was net profit, which is impressive. And then when we get to 55 billion in 2018, 22 billion was it. Margins are beginning to drop because this is a company that is spending a lot on trying to just grow the company, improve the technology of the company, and also the privacy. They have to just hire more people to fix up the privacy issues. So when we look at the 70 billion they earned last year, and then they earned 18 billion. So the one thing that didn't go well last year was the net profit actually decreased. So if you look at the years prior to that, it went up 56%, then 38%, then it just decreased 16. So from 38% increase to 16% decrease. But the major reason for this was because they had a $5 billion fine from the FTC that they paid in the first half of last year. So if we look at the quarterly net profits, which is the numbers that I really wanted to highlight, I put them in boxes so you can just see, connect the dots from here to here to here. So you look at here, quarter one, 2.4 billion, and here 2.6 billion. So you kind of add these numbers up here, and it's about 5 billion. And the year prior to that, it was like close to 5 and close to 5. And so the year prior to that was about 10 billion, and last year was about 5 billion. So you can clearly see $5 billion is missing. So that was to pay the fine. So you would think after they paid this fine, this year they should be more or less alright. So you can look at this figure and go 18.5 billion. If we put the 5 billion back on there, they actually made about 23.5 billion, which is a growth from there, but much slower, of course. So my kind of thinking is that I think based on if like they get that 5 billion is just a one-off impact, Facebook isn't going to be fined any more money. I think they could be making about 25 billion or more this year. So based on 25 billion, I look at say like a PE of like 25 to 30, because mind you, this company is still likely to grow at like 20%. So they still are going to be considered quite a growth company, and they've got such a dominant position that you would think it's in a sense quite a reliable company. and also they dominate like in terms of advertising. If you want your advertising to be seen, you probably have to be on Google or Facebook. So this gives Facebook a lot of pricing power. But they can't actually increase the price dramatically. They can increase it as they go. And this past couple of years has just been a transition of like increasing their costs, because they've just had to hire a lot more people, just to look at privacy and improve the features of the websites and the apps. So in terms of that, where do I think they'll be valued around this year? So like I think they'll be valued around 625 billion to 750. I think by the end of the year it'll be closer to that 750 billion. But we will see. And in what should be bouncing around a share price of 225 to 270. So where's the price currently at? Currently it's at $210 and a market valuation of 584 billion. So the upside, in a sense, like it's not too bad of an upside, but it's not a huge upside. It's more or less between a 20 to 30% upside this year. But mind you, this is a pretty like stable, reliable company in some sense, because their position, no one's really coming in to just challenge them. Like Twitter's not, Snapchat's not. So I don't see them being challenged. I'd say like if this is a company that you could basically just put your money in there, and based on their monopoly, like this is literally a monopoly. You can invest in this company and just enjoy the benefits of a monopoly, because firstly, like apart from its privacy issues, it's not being that heavily regulated. So in terms of that, it's kind of like a guaranteed win. But it's a question of that's a question of that, like, is 20 to 30% all right for you? If it's all right, then I think it's a good buy for you. Like at this price, this is an all right pricing, like 210. I think you can't necessarily lose money based on that price, and based on the momentum of this company. Like literally, I can't see anything that's gonna stop it this year. So yeah, like, and I think that there's issues are kind of behind it in a sense. So like we look at this $5 billion as a fine, but the one thing I also haven't mentioned is they also had legal related costs, which amounted to as high as like $2 billion extra. So like I didn't add it on because at the end of the day, they still might need to use those legal costs this year. They still might need to hire extra people. So that's why I've just plus the 5 billion on and then added more profit for the future, for the growth this year. But I actually haven't taken account that in case they don't actually need more legal costs, their net profit could be actually 26 or even 27 billion. But I'm just going to go at 25 to just be a bit more conservative. And based on a 25 to 30 PE, some people might actually give it a higher PE. But I think 25 to 30 is kind of like, in a way, being a bit cautious about valuing it too highly. But, strong monopoly position. In terms of pricing, what's a good range to be buying at? You can be buying at this price, or basically lower. Like if you can get in lower, of course, always get in lower. But if you say, could I be buying at this price? It's fine to be buying at this price. Like even on my low target, like 225, like if you spent a whole year in the stock and only got to 225, you didn't lose money, but you didn't gain a lot of money. But I think that's the lowest, the minimum the share price should be at. And I think it should be closer to that 270 range. And knowing the stock market, if things overshoot, things could go to 300. There are talks about, like I think one guy, Scott Galloway, kind of thinks this could be the next $1 trillion company. So, in a sense, if it gets to $1 trillion this year, that kind of blows my kind of valuation out of the water. It's much more higher than that. But on a conservative type of view, that's the kind of pricing I'm giving it. So in terms of that, I think if you're buying at this price, it's usually, yeah, I'd say you'll be fine. Looking at the trend of everything, things are growing. The privacy issues are way behind them. The fines are paid. This stock was like, there was a lot of uncertainty. That's why I was like trading for like 150, 160 or so, dollars per share. But I think those legacy issues are kind of behind it, and now it can move forward and progress their projects. Um, and that's the one thing I haven't actually even counted as well. They could have future projects that they're working on that's going to generate them more revenue. So that's kind of saying but I'm just going to base it on the current kind of operations, and the current view is it's quite good. And I'm like, if you ask me, am I an investor in this company? Probably not, because if the growth isn't quite quick enough for me. Like, I like my companies with a bit more growth. So like, but I mean, if you've got quite a large sum, you don't know where to invest it, and you're looking for like a pretty large, like blue chip type company, like in a kind of view, like Facebook is like a type of blue chip company. The problem is it's just not paying a dividend, but in terms of its position, it's pretty secure. It's got over 50 billion in cash, so anything that tries to compete with it, they can just compete. They're not going to, run out of money trying to compete. So in terms of a competitive moat, this is in terms of the tech world, this is as strong as a moat as you'll probably find. There's not really many companies that are going to come in and be able to challenge it. At the end of the day, in terms of social, they are strong. But of course, they might want to head into payments and retail and shopping. We can't guarantee how strong those moats would be, but in terms of social, this is the biggest bet on the market right now that you could go for, and I think it's a pretty safe bet.